Welcome back to Squawk Box this morning. Stocks started off the new year with a sell-off. Among the big concerns, fears of higher taxes if Democrats take the Senate, virus spikes, and UK now on total lockdown, and Iran getting aggressive and enriching more uranium. Joining us right now to discuss the latest in the market is Julian Emanuel, BTIG Managing Director and Chief Equity Strategist. Also, Megan Horneman is here, Verdant's Capital Advisors, Director of Portfolio Strategy. Good morning to both of you. Julian, let me start here. What's on the table today in terms of the issues that I just mentioned are not that different than they were last week. UK lockdown, yes, but I think we all saw this either coming there or things like this happening elsewhere. Why has there been this turn in sentiment, or really do you think this is just, there hasn't been, and this is just a 1 or 2 day blip?
It's unclear whether this is a true turn in sentiment, but if you think about it, coming to the end of the year, essentially institutional investors very fully positioned, very low cash levels. The retail public has been a very consistent buyer post the election. And so really when you combine it, both sentiment and valuations were at a high. And often when the year turns, you do see a bit of, I guess, change of pace might be the best way to describe it. So really when you think about it, it's valuation and sentiment meeting reasons for a potential pullback. And actually, a pullback from here would probably be a healthy thing. In a lot of ways, it's a wonder that given all these potential catalysts for the downside, that the market has held in as well as it has.
Real quick, and then I want to get to Megan. Does that mean that you're holding cash right now? Does that mean you're waiting for this pullback? And if everybody's waiting for a pullback, that means the pullback's never going to happen.
For us, it basically means a more balanced point of view. A little bit of cash is absolutely fine in this environment. The way we think about it is if you look at the last 3 years, you've had, massive rallies, and then you've had gut-wrenching sell-offs. And what you have to ask yourself is, am I prepared to be a buyer down 10 to 15% from here, which has happened numerous times? If the answer is no, you do need to raise a little cash. And if the answer is yes, you just need to ride out the volatility.
Megan, you waiting for a pullback?
Yeah, absolutely. We came into this year holding a little overweight cash position. All of the events that we saw in November and December and the rally that we saw was really pricing in all of that good news. But the question is now, going into the next couple months, what's really the catalyst that's going to drive it significantly higher from here? And some of the things that we see are actually more risk to the market. Aside from the obvious being the rise in coronavirus cases, the fact that we have the Georgia runoff today, but also if you look at seasonality, in 3 of the past 4 years where we've had the S&P 500 up more than 15% for the year, 3 of those Januaries ended up being negative. The only one that wasn't negative was 2018, and we all know what happened at the end of that January. That was our first 10% correction that we had seen in some time. And then the other thing is that we think economic data is really set up to disappoint in the first quarter. Typically, economists come into the year being much more optimistic. You see increases in their economic forecasts. But if you look at something like the Citigroup Economic Surprise Index, you tend to see that steadily come down in January, February, and March. So the fact of the matter is,
Megan,
the markets.
Give me your upside and your downside from here at this moment.
So downside from here, I think in the next 6 weeks or so, I think you could see a 5 to 10% correction. Still would view that as a buying opportunity, but long term still very optimistic about the global equity market.
But doesn't what you just say suggest that actually it's going to be very hard to have a real pullback right now? I mean, I recognize what a pullback means and how it works, but as I was saying to Julian, if everybody's anticipating one and if everybody's planning to buy on it, it's not going to look like much of a pullback at all.
Like if you have the economic situation that becomes much more uncertain, that does tend to lead to people to pull back and hold off until they get a little bit more clarity. And I do think that's the case. But if you get into the second half of next year and 2022, we're setting up for a very strong global economic resurgence. Remember, we'll have much more full distribution of the vaccination by then, and that's coupled with the fiscal policy we've seen and the monetary stimulus that you've seen globally. So that should set up for a good environment in the second half of the year going into 2022. But this economic environment and the rising COVID cases and the regional lockdowns will create some hamper some sentiment in the near term.
Okay, we got to leave the conversation there. Megan, Julian, appreciate it very, very much. Thank you both.